I'm Eoin Fahy, Head of Responsible Investing at KBI Global Investors. Our natural resource strategies invest in listed equities around the world that are providing solutions to three global crises. First, and I suppose most obvious, the shortage of clean energy and the need to prepare the world for an energy transition. Secondly, the shortage in very many parts of the world of clean, safe water and sanitation services, which is also, of course, a health crisis. And thirdly, a shortage of safe food, as population growth far exceeds the ability of the planet to grow crops to feed that population. So we invest in companies that are solutions providers to global problems. So what does that mean in practice? Well, it means investing in, for example, a company that has developed or is developing a technology to make water supply safer through better purification process. Or it could be a company that is developing a more efficient type of wind turbine that will generate clean energy, or that helps farmers to identify precisely the chemicals and the water that they need, or more often that they don't need in terms of sustainability, to generate higher crop in a sustainable way. So we're constantly looking for companies, wherever they may be in the world, that are addressing these three global crises with technologies, with products, with innovations that will in some way reduce waste of water, of food, of energy, or increase the supply of clean energy, of food, or of water in some part of the world. So while all of the investments in our portfolios are there precisely because they are solutions providers, they have very obvious benefits to the world in terms of the products that they're producing. Over and above that, again, we also look at the overall ESG performance of each company in our portfolio. We look at whether its governance is correct and is up to best standards. We look at whether the company is treating its workforce as it should do. We look at whether its products are safe, whether they have any environmental advantages or disadvantages, benefits or costs to the environment. We look at things like product safety. We look at a whole range of factors right across the gamut of so-called ESG, environmental, social and governance factors. And most importantly, we don't just look at these factors, we build them into our investment process. So all of the things being equal, a company that has a good environmental impact is more likely to be in the portfolio, or to have a bigger position size in the portfolio than a company with a poor environmental score. And the same applies to social factors or to governance factors. It's absolutely a key part of our investment process. It's not something that's separate to our investment decisions. It's built into our investment decisions in the same way as the price-earnings ratio might be, or the dividend yield be, or any of the more conventional financial factors would be built into those investment decisions. All of the companies in which we invest are solutions providers addressing some of the global shortages that we've discussed. And therefore, we can be pretty sure that all of them are having a significant impact, to use that piece of jargon, to having significant environmental, social benefits. However, it's not really good enough, we think, just to simply say that we believe they're having a positive impact. We want to measure that in some way. And of course, the industry as a whole, not just our firm, but many firms, look at the United Nations Sustainable Development Goals as not a perfect way of measuring impact, but as a practical way of measuring impact. So we developed our own methodology a couple of years ago. So we look at the revenues of every single company in which we invest, and we look in fine granular detail at whether those revenues, those sales of these companies are from products that contribute positively to one or more of the United Nations Sustainable Development Goals. And we look not just at whether they're contributing positively, but in rare cases, we also take into account if they're having a negative contribution on the achievement of those Sustainable Development Goals. We do that analysis in great detail, we tot it up, and we're in a position then to disclose to our investors and indeed to the public exactly what percentage of revenues in each of our portfolios is contributing positively and negatively to the achievement of each one of the 17 Sustainable Development Goals, which we think is really positive, it's transparent, and it allows all investors to see the impact that their investments are having if they are an investor in one of our portfolios. One of the fantastic things from me, from my personal perspective, is that even when I joined the firm back in 1988, 32 years ago, even then we were taking what would now be called ESG and responsible investing into account in some of the portfolios we manage. So I've seen that journey of the firm, and I suppose of the industry, a little lagged, but of the firm and of the industry towards responsible investing and towards adopting ESG fully into investment processes and investment products over more than 3 decades now, although of course we used different terminology in those days. So it's been amazing for me, I suppose, to see in particular the growth in the last 5 years. And we're managing our natural resource strategies in the area of things like clean water and clean energy for about 2 decades now. But the real explosion of interest in the industry has probably come in the last 3 to 5 years. Some people would say maybe even 2 to 3 years. And over that period, we've seen the huge increase in interest in ESG right across the industry. We've seen fantastic organizations like the UNPRI really get going, grow its membership and develop thought leadership in many areas, and we've been happy to work with them on working groups and things like that. The same for organizations like the Institutional Investors Group in Climate Change, which is doing fantastic work in developing tools and methodologies for investors to look at issues like climate change. And there's so many other bodies. Climate Action 100 Plus is doing fantastic work in gathering investors together to address greenhouse gas emissions from the worst polluters worldwide, and it's really having an impact on those companies. I could talk all day. There's fantastic work going on in the industry. We're more than happy to be a part of it, and I hope it will remain like that for many years to come as the industry works to tackle these sustainability issues.